Oh, right. So I woke up this morning and I log in and I see this and I'm like, whoa, 800 grand. And then I'm looking at Netflix. I'm like, wow, did something like screw up last night? Did first thing I thought is like, oh, I got assigned on one of these big stocks that I have. That was the first thing I thought is that I got assigned. And then I'm like, oh no, it's Netflix splitting. But I had to take a screenshot of that because that looked pretty freaking awesome to wake up to. And, this is what it feels like to get. I've never had this happen before in my life. So doing this over 30 years, but it would be nice to actually wake up one day and see that in a day, and just wake up at it randomly like, whoa. But I thought that was pretty cool, actually. I was like, damn. And then I was like, oh, calm down, dude. You're not. You're going to be working. You're going to be working till you're dropped in the dirt. But I thought it was pretty cool. So as I mentioned last week, now they're talking about with Netflix is that's why I had, gotten a bunch of these spreads before because I wanted to. I wanted to take advantage of the split. I also own some Netflix. I did buy some. I bought a little more last week. I also own some already. Because, I think what's going to happen with Netflix going forward here now is I think it's really going to be a great trading vehicle. I mean, it's going to come in here at 110 to 111. I got to believe that it's going to capture a ton of interest. Not just from hedge funds and everything else, but really just from John Q. Public people that are going to be able to now go in and afford not only the shares, but they're also going to be able to afford the options because, even before the split here at $1,100, even the options sucked in here. They were terrible. They were absolutely terrible. So it's going to be cool. I think it's going to be cool. I'm excited for it to happen. The next couple of days, more than likely, a lot of the statistics and whatnot are going to be a bit of a mess on it because, with the whole splitting and the adjustment and all that, it's going to it usually takes a couple of days for that type of stuff to settle in, as far as a lot of the statistics with like IV, volatility ranking and all that stuff. And then the options, because basically everything kind of like moves. So, and everything that they're doing is all going to be like new product basically, because they are actually having to reissue everything. Now it's all electronic. Like we all know that. But underneath there is a lot of like stuff going on. But you could see here that, this stock has been just a rocket ship. It's had its problems and it's had its drawdowns like any stock has in this company's history. But for the most part, I think this is a great thing. And I think more companies need to do this, and I think more companies need to keep their stock prices around $100. I've said it before. I think the $100 mark, to me, makes the stock not only like it's not only just about the price. It just makes everything else about trading the stock better. The options tend to be more liquid. The stock tends to be more liquid. I think you get more volume and you get more movement. There's definitely more interest. You kind of weed out a lot of the big institutional. Not that they're not buying it, but you kind of keep them from being the biggest players in those underlyings because now they're more attractive to a broader audience. And, and I think they have been doing that, but you still have the likes of like even a Microsoft here now at $500. Like to me, if they really want to boost this stock after it kind of got hit, do a stock split. I think if you do a stock split here, you're going to. I think you're going to gain some momentum about that. Same thing with Meta. It doesn't have to be a 10 for 1, but do a 5 for 1. And then it doesn't dilute anything. It doesn't do anything. I think it's probably a little more of an accounting type of thing that, at the end of the day, that's because they have to, account for the shares that are out. But everything's electronic now anyway. So, and it's not like they have to, like years ago, back in the day though, really when they had to issue certificates and doing a stock split, it was a pain in the ass. Because they actually, had to go and look up the QSIP numbers and all that other crap. But now it's all electronic. Now it's just basically, somebody just pushes some Python code or whatever whatever it is. They just push some code and they're done. Have a nice day. So anyway, that's enough of that. But, Netflix today, I think it's a good day. So if you didn't get down on some Netflix, I think today is the day. To get down on some Netflix. Now, don't be disillusioned by that IV rank that you saw up there. That is not a true IV rank. The reason that's ballooned like that is the same reason why my account ballooned the way it did. It all has to do with the stock split. But I would have to say, if you're going to get down on Netflix, do the stock. And don't be so fixed on doing something with the options right now, because again, they're going to need to open, and you're going to have this whole, and the pricing of those. And I just don't think the pricing of them is going to be very efficient today. And that's just my opinion, because, all this dust of the split needs to settle. But even though, if it's not today, I think after today, you're going to have a good opportunity to get down on some Netflix. And because it's $100 now, which I think is pretty cool. All right, that was enough on that. Pretty much beat that to death. But Netflix is Netflix. And over this weekend, what I had done is I did some research on TradingView specifically in reference to their footprint charts and order flow. And what I was probably more disappointed in is that the tier that I have, I don't really have a very high tier on TradingView. The only thing I use it for, I rarely trade inside TradingView. Let's go over to the ES. I rarely trade on here. I mainly just use it for the charts. I mostly trade on Tasty Trade for pretty much everything, because that's where bulk of my trading money is. Look, I have safe money as well. I call it safe money. And what I mean by safe money is it's stuff that it's money that I don't trade actively with. I have at Schwab, and I basically just own stock in there. But anyway, that being said, neither of those platforms have any order flow. And I used to use NinjaTrader's order flow, and they didn't call it order flow. I forgot what they called it. They called it, I think it's volumetric is what it is. They were called volumetric charts, right? Whatever. Just call it something else just so it's different. That's fine. But the problem I had with NinjaTrader is I'm a Mac user. I'm a Mac user, and NinjaTrader, I would have to use a virtual machine. And anyone familiar with using like Parallels, which is really the only choice you have. There's some other ones out there. But using virtual machines sucks. It stinks. And NinjaTrader as a whole isn't a very, I would say it's very pretty, and it looks nice as a platform. It performs like dog shit. Anyone who's used NinjaTrader for a period of time, unless you have some like beefed out system that has buku's amount of RAM and some massive processors with coolers and everything else. NinjaTrader's product, because if you're using multiple screens on just like, even I know I had problems with it on a Mac with 32 gigs of RAM and an M4 processor. That's a quad or a 12 core. It would crash inside the virtual machine no matter what I did. And and then I took it a step further. I went on a PC and said, all right, maybe it's because I'm using a virtual machine. Went on a PC, it was a gaming PC. It was my son's. And same thing. This thing would just crash and just, it wasn't crashing all the time, but, just randomly, for whatever given reason, after a couple of days, it would just freeze up and just go into that mode where it says, oh, the program's not responding. And anyone familiar with that knows exactly what I'm talking about. And I just got aggravated with it. I was like, you know what? Enough of this. I'm done. I'm done. I can't deal with this thing. This thing is written like garbage. And the problem, and not to sit here and just beat on NinjaTrader, I'm more disappointed because I really love using NinjaTrader. I really liked it. But I'm more disappointed because all they've really done when they upgraded to 8 is they took all the same shitbag code that they had in the previous versions and either commented out, more than likely is what they did, commented it out or rewrote it to some level instead of just, if they were going to come out with a new release, just kind of do it from scratch. Do it from a clean slate. And you would have gotten rid of a lot of the bugs that were still built in there. So anyway, needless to say, that's kind of the problem with Ninja. So I was doing some research on here, and I would have to update my tier in order to get order flow. And I'm thinking, why? It's basically, free. It comes like if you're paying for a data source, which I already am through my brokers, it's basically free. So they want me to update my, and I think I forgot what tier it is. I could probably go in here and look. So anyway, I just want to throw it out there. I know there's not too many people commenting on much, but if anybody's got any comments about it, do you have it? Do you like it? Do you not like it? I'm interested to see if it's worth it. Because I always had liked order flow, especially for trading futures. I kind of like it because I believe it gives you a little bit better snapshot of what's going on than just your standard, time charts. I think time charts are time charts in general are outdated for futures. That's why I've always been kind of partial to tick charts. And then, now, and with order flow, using the order flow candles. And not that I'm looking inside each candle of where, but when you are looking for an entry, it's nice to see, it's nice to see a snapshot of like where the buy and sell orders, where's the imbalance coming from to make you go and take a trade. I mean, to me, it is like a little more confirming of an entry than just looking at a basic candlestick, because you're not getting that information in a candlestick. I mean, anybody who says that you can tell that there's an order block down here, that's all, you're full of garbage. You have no idea from any of that because it's a candlestick. And are candlesticks important? And I mean, but don't tell me that you're getting that information that there's some magic order block up here because there's a couple candlesticks. That has nothing to do with it. But if I had a footprint chart, I would be able to zoom in on it and tell you for sure, you know what? The last time this came up there, there was there was 1,200 or 1,400 orders sitting up on the bid up there. And that's why when it got up there, they smashed the piss out of it. Okay, so you can't tell that from a candlestick. So anyway, that's all I have to say about that. So as far as today trading, going to be very similar to Friday. I'm going to basically sit on my hands today because I think I think we're in for a pretty slow, choppy, grindy day. Unless something hits the news tape that makes shit move, I don't think we're going to see a lot of crazy movement. So as far as spots, I'm definitely still watching. I'm still going to look at this. It's kind of a ways away. I mean, I don't think we get anywhere near there today. Where's my pointer? I got to get my pointer. But I'm definitely looking at R3 today, which is 68, 65, 50. I have an alert set up there. Okay. I'm also going to look at R2, 68, 17, 25. That one is looking a little more realistic today. And then for those interested, this is how you actually write alerts that go into Discord. And what you have to do is you have to write it in JSON. So this is JSON. So what you have to do is you have to set up a webhook, and you should, you get a webhook. You go into Discord. You just click. It's so easy. You go into Discord. You click on webhook in Discord, and you create it. Call it anything you want, and it's going to give you a URL. And then you just copy it. And then when you set up alerts and you create them, you just need to stick them in those curly brackets, not the regular flat square brackets, but the curly brackets, which is the shift button above those regular brackets, and type in content in quotes with a colon, and then whatever the message is that you want, end it with quotes, and then close that. And you can see here, it's all green and it's checked, so it's valid. And when you create this and this triggers, it's going to go and send that alert to some channel, right? In Discord, you're going to have to create a channel for it. And it will stick it in there as an alert. Like, yeah, that alert went off. And so that's what these clowns are doing in Discord. So don't think it's like some big magic thing that they're doing. When they say, oh, we got alerts in our Discord, that's all they're doing, folks. They're just arbitrarily, like, I highly doubt there's probably a few people that are like programmatically writing alerts. But for the most part, they're just putting them in just like that, and they're just not showing you. And it's that easy. You can do it yourself. And so you can actually have them sent to email. You can have them sent to your phone. You don't need to have them sent to a Discord. You don't need to have somebody do it for you. You can do it all by yourself. So no matter what it is, so easy. It kind of amazes me that there's people still paying for alert services like there's some kind of, commodity. Because the reality is, by the time you even get this alert, unless you're sitting in front of your screen all day like me, and even when you get that alert, and realistically, if this alert goes off, I'm probably going to miss it more than likely too, because I might be doing something else. I might be taking a shit. I mean, I don't know. I have no idea, and then what good is it? I mean, the idea of the alert is to kind of be aware or be near where you can take advantage of it. So anyway, that's it. So there you go. There's a little inside sports there with the charting. So I'm looking at R2. Again, the way you got to look at this one, R2, is that if we do the creep and we creep up there, and we kind of grind, and we get up there slowly, it'll be a good trade. If we get up there with any kind of momentum, step aside, because you're probably going to get run over. I'm definitely looking at this spot as well. I usually look at the hourly. It's just what I do. That's kind of what I look at when I'm looking for setups, especially in the ES or in the big indexes. But, I like the fact that you kind of have this double kind of, you had some real big resistance here at this R1, but we blew through it, but it faded and it didn't last. And so to me, that signifies that there's something going on up here that the markets particularly weren't really interested in. So I'm just going to mark this off as not so much a level, but just kind of an area of interest. And I always like to put the date that I did it. So today's the 17th. And I always like to kind of just say what it is that, without giving myself a soliloquy, but what it was. And just here is just like, a double candle or something. That's it. I mean, just a point of interest that when it does go off, to see where things are at that time and see if it's worth taking a shot. All right. So there it is. Now, on the downside, the pivot looks very interesting today. Again, I'm looking at some spots that are normally out of my wheelhouse, like in the middle here. And the reason I'm doing that is because I don't think we're going to get a big, again, unless the news cycle presents something to make everything kind of go off the rails one way or the other, I think we're going to be on an inside day today. So if that's kind of my feeling of where we're going to be, then I need to look for trades that are inside the range. And I kind of like this spot here at the pivot for a possible long. Okay, and that's 67.40.50. Also, S2, 66.63.25. Now, the problem with S2 is I think if we do get down there, we're going to be in for probably a little bit of a whooping today. It's my hope we don't kind of get down there. I would prefer us to stay within this range. I would prefer us to have a pretty tight range today. Whether we close up or down, I don't really care. But if we stay in this tight range today, I think that's really healthy for the market, because I think it kind of tells a tale that perhaps, things are normalizing a little bit, and then people aren't just like rushing to the door to buy shit, and they're not rushing out of the door to get rid of stuff. They're kind of picking and choosing their stuff, and they're being real traders and investors than just kind of FOMO or fear type of stuff. So anyway, that's just kind of what I'm looking at on the ES. I don't trade, I don't trade much of these other indexes, but the one index that does start to pique my interest a bit with this sell-off is the Russell, because it did appear to get the brunt of the, as far as like the brunt of the sell-off, these stocks seem to get nailed a hell of a lot worse than some of the others. And I kind of like the Russell long, so I'm not going to really mark anything out on here as far as levels, because I'm likely not going to trade the Russell. The way I'm going to trade the Russell is I'm going to use the IWM, and we'll put that one up as kind of a trade today. And what I would like to see, I don't even think I have it in here, but anyway, what I'd like to see on the IWM is I would like to see us kind of gap down a little bit more on this. I would like to see a little bit more weakness today. I don't want to see it get crushed, but I'd like to see it gap down a bit. And the way I'm going to actually play the Russell is I'm going to go in and play a little long ball here, and I'm going to go out to June. And I'm likely going to do something pretty standard, boilerplate call spread. You really can't do you can't really sell anything in here. There's really no volatility in this at this level. So, to me, you're kind of, you're kind of biting off a little bit more than you need to by selling puts. You could sell puts. I'm not going to say you can't. I would never say you can't do that. I just don't think you're really getting paid as well. But the calls that I do like the 225s. I like the 225s or the 230s. And to do either one of those is fine. I'm not going to just do and buy the calls. I'm going to do a spread. So I'm likely to do an either $5 or $10 wide spread. And that's how I'm going to kind of start leaning a little long here on the Russell. I'm going out to June, so I'm giving myself 213 days. I'm giving myself some time, and I'm also going to be in the money by about a little over $10. Yeah, and the other reason as well is I don't really have much exposure to the Russell. I don't really have too many stocks or even options on companies in the Russell in general. So, and the thing about the Russell too, it is pretty financial weighted, right? A lot of the stocks in the Russell are finance, so there's regional banks, lenders, that type of thing. And again, I'm not looking for any other reason than just kind of going along here. The fact that this thing got beat up a little bit, and it really hasn't partaked in the overall rally as much as the other two indexes, or other three, if you want to put the Dow in there. I don't really give a shit. I don't even look at the Dow. If you ask me what the Dow Jones is, and if I would actually even get, it's funny because somebody asked me that over the weekend. They're like, "Oh yeah, did you see where the Dow is?" I'm like, "No," because you know what? I don't even look at it. I don't even care what the Dow Jones is. If you actually ask me what the price is of any of the indexes, I'm probably not even going to be able to tell you what the number is, to be honest, because I don't even look at the price of those indexes. I don't know. The only one that I would probably have a close shot at saying of what it is probably the S&P, because that's the one I do. But other ones, I could give you a ballpark and say, yeah, it's probably 250. Like the Dow, what is it, 41,000? I don't even know. What's the DOW? Is it 41,000? No. See, I don't even know. No, that's Dow Chemical. I don't even know what the Dow. It's a good question. I don't know. It's sad, but I don't know. What is the Dow? Is it 40? I was close. 41,000. It wasn't even close. It's 47,000. So I don't know. I don't freaking know. I don't even look at the price. Sad, but that's just, I don't know. You do this long enough, folks. You don't even pay attention to that stuff, because to me, that's all headline bullshit, news garbage that the financial news tries to, the Dow Jones. Who gives a shit about the Dow Jones? I mean, the Dow Jones, if you really want to put it in perspective, though, the Dow Jones is the most meaningless of all, because literally it's 3 or 4 stocks that are the biggest percentage of the Dow, which is it's Apple, Microsoft, and I think it's even Nvidia now is in the Dow. Isn't Nvidia? I don't even know. Isn't it sad? I don't even freaking know what in the hell is in the Dow. I don't even know. Let's take a look. I mean, I don't want to change gears, but I just think this is hilarious because I don't freaking know. Let's do a heat map. I mean, the S&P, right? I mean, that's the same thing. S&P is NVIDIA, Apple, Microsoft, and Google. Absolutely nuts, right? Let's look at the Dow. I don't even know. Dow Jones, that's the composite industrial. Here it is, right? That was close. Apple, Microsoft, NVIDIA, and Amazon, right? And everybody, look at everybody else. Everybody else is like a freaking dwindling, a little minuscule nothing, right? So why did what is the, they should call it the AVM index, the Apple, NVIDIA, Microsoft index, because it's a joke. It's a joke. It is a joke. That's why these indexes overall are ridiculous. I mean, even the S&P, NVIDIA, Apple, Microsoft, Google, Amazon. It's a joke. It's an absolute joke. I mean, you look at these things, it is literally a joke. I mean, how can you call that? But I will say this about the Russell 2000. It is pretty, look at that. What a difference. Talk about a true weighted index. The Russell is probably a better true weighted index of what the hell is going on than all of the others. I mean, to me, this is what all of those indexes should really be. But they're not. And you know why they do that? Because they want to be a winner. They want it to be a winning index. I don't even know what the NASDAQ. The NASDAQ's probably the same. Yeah, the NASDAQ's exactly the same. The NASDAQ's the same. Same players. So, I mean, anyway, that's kind of another reason why, and that was kind of enlightening, but that's another reason why I kind of like the Russell, because it does seem that a lot of these tech companies are not, it does seem that the investment community at large is backing off of them a little bit. Look, they're not stopping. Don't get caught up in the bullshit of what the financial networks and Gunlock, and you're going to have all these Michael Burry and all these people. Whoa, yeah, okay, yeah. There's the 5 or 6. It's like the other guy. What was his name? Faber. Who used to come on? Mark Faber used to come on every 6 weeks. The market is going down. Shut up, dude. If you keep saying it long enough, you're going to be right. The market is, and look, just don't get caught up in it, because if you think they're backing off, buying into this, you're nuts. You're kidding yourself. They absolutely are. Have they taken some off? Absolutely. And have they maybe reallocated? I don't think really they completely backed out of the game. I think they backed off on a lot of the stocks they were piled into. I don't think that money went and got reallocated somewhere else outside of that sector. I think what they did is reallocated it to maybe some of the smaller players that have now the potential to move much faster and quicker than the bigger giants that they piled into. So anyway, that's just my take on it. But anyway, that's why I'm looking at wow, that was a long, drawn-out bullshit story of why I'm going long the Russell. And I don't have exposure to it. I don't. And so that's kind of where I'm sitting. So I'm going to be looking at buy calls, and this is going to be not a one-trade Mickey here. I'm going to kind of build this position, and I'm going to start in June, and I'm going to build this out, and I'm going to start in June, but then I'm also going to eventually go out even to December of next year. All right, and that was kind of it as far as that's concerned. And so probably the big thing this week that everybody's talking about is going to be earnings. And let's go up to, probably easier to change this to earnings. Is going to be earnings on NVIDIA, right? So at least that's what the news is telling you. So we have quite a few bigger ones this week. We got Target, we got Lowe's, we got TJ Maxx. Target looks interesting. Good IV rank. And I think they come out tomorrow. Yes, tomorrow? No. Wednesday. So we're going to be doing, and then the big one, the big kahuna is NVIDIA, right? Everyone is going to kind of have eyes glued on that. Probably similar to what Apple and Amazon, because let's face it, Apple and Amazon, when they came out with their earnings a couple weeks ago, basically saved the market. You know, the market looked pretty crappy before both of those companies. And of all things, Amazon, I don't think, no one expected it. And Amazon kind of gapping up real heavy on their earnings beats and everything else really saved the market. And the market kind of rebounded after that, because before that, market looked a little shaky. There's no question about it. And I think that's kind of what everybody's kind of looking at here with NVIDIA. Now, the problem with NVIDIA, for me anyway, for trading this for earnings, this IV rank stinks. You know, the fact that it's in its 30s, I just really have no interest. Now, unless this thing balloons up and gets over 50, I'm not going to touch it. It's just not worth it. Just absolutely not worth it, in my opinion. You know, they're expecting, let's see, $13 move in the current. Excuse me, I'm going to have to. Excuse me. Wow. Get those demons out. Expecting a $13 move if you're going to trade in November. That's only got 4 days left. And by the time they announce their earnings, I believe it's only going to be like a day or two left. So you're forced to be in the December, which they're expecting a $23 move. January 28. I don't think it's tradable for earnings. And that's just my opinion. I don't think it's tradable. We'll put it up on the chart just to kind of be consistent here. Let's change this to Big Tech. Yeah. NVIDIA and beyond. It's been a rocket ship. Let's face it. There you have it. It's been a beast. Going to the 4 hour. But of late, right? Of late, it does look a bit, you know, and I'm not going to say it looks bad. I would say it looks tired, is what I would call it. Now, if I were looking for some areas, I'm going to probably say more than likely this thing should probably get support around the 170 level. That's what I would at least say. You know, if you're looking at it chart-wise. Now, and then the sky's the limit, let's face it, with this. So, you know, and to me, it's kind of in a spot where, I wouldn't even feel safe even selling premium up above, let's say, 220. And below 170, because I mean, again, there's just no real volatility in here to sell. All right, so anyway, that's kind of my gig on on NVIDIA. And unless that change, I don't really see anything worthwhile, at least at this point. We got the deeps, and this one's going to be coming out before. They usually do their earnings in the morning. So tomorrow morning, problem with the deeps is that the depot, again, IV rank, crap, eat the socks. This stock stinks anyway to trade. I mean, I don't really trade it very much. You could see, look up and down the option chain here, and you don't really have, this is the one standard deviation, and this is the expected move. Look at the open interest here in December. This sucks, right? I mean, this sucks. There's like nothing. Now, look, it might be fine to trade it as a stock, because it does have good volume overall, but as far as the options, they suck. I mean, if anything, it looks like people are playing this. To me, it looks like you got a lot of people either playing this to the upside or selling these freaking calls up here prior to earnings. It's probably Tom Sosnoff selling the calls because he loves selling calls. But anyway, to me, you don't even get any open interest up in here until like 400, which is kind of a long way off. Only expected a $23 move. Again, crazy to me. Now, the other thing you don't know is you don't know how long these have been open either, right? But again, that really doesn't matter. So anyway, you can't really trade the deeps either. I think the only one you're really going to be able to trade here for earnings is going to be Target. Target, good volatility. The stock has just gotten absolutely just blown to pieces. Medtronics, let me take a look. I haven't really looked at this one. They're not really expecting much of a big move here. Not really at all. Good open interest inside the zone for the most part, but overall, I don't even think it gets a very good liquidity rating. In fact, I think it's pretty crappy. That's 3 stars. That's actually not bad. It's better than I thought. Now, the one to do, I think this week is going to be Target. So keep an eye on that one. Again, good volatility rank. Not going to do anything today on that because they don't have earnings until Wednesday. So, and they're usually before the close, so you're going to have to do something Tuesday night. So definitely Target. And I don't even think Walmart has I don't know. Walmart IV rank looks okay. What is that historically? That's pretty elevated. So Walmart might be another one too, which I'm actually surprised about. Again, even though the IV rank is 42, historically, look, this has been gaining a lot of volatility. So it's been building in here. And this is historically, again, from the last, month and a half, 2 months, that's historically a little high. So that might not be that might be in play too. But again, that one's not till the 20th. Yeah. So there you have it as far as the earnings. So and as far as like all the other stuff. So if we're looking at liquidity and high options volume, I go through this list every single day at the end of the day. Every night I go through this list. I take this list, this high option volume list, and I go into IVR and I rank it by IVR and I go through every single one of these stocks every single night looking for one that will kind of pop in my eye that hasn't got my number in the past as well. Oracle still showing up on this list. They had a really nice bounce, kind of a relief bounce yesterday. Finally, it caught a bid because I don't think it's caught a bid for like weeks now. So it finally caught a bid where it is. I don't know if that continues. It looks like it's off a few cents today, but volatility still remains high in here. I don't think they have their earnings until like next month. Yeah, 12/08. They always go late in the year, so we do have some time for that one. But as I said, I still think what I had said last week with Oracle holds true. You can sell puts in here under. I'm going to stick to it. I said 220, and I still believe that. I think you can sell puts under 220 in here until your hands bleed and be okay. But not just any puts. You need to go out March, like I said, March, June, December. Give yourself some time. Give yourself some time. Some of the other ones, I was looking at Riot a little bit. I don't know. I cannot wrap my mind around this stock. I have always gotten this one wrong. And I've always been on the wrong side when I say, yeah, I think it's time to maybe start selling puts. I do, and then I get railroaded in it, and it either goes nowhere or I end up getting assigned, and then I have to sell calls, and then I wind up selling calls, and then it never gets called away, and then I actually have to, eventually just dump it because it's a piece of crap, and I usually dump it because I'm looking to take the tax loss. So, I don't know. If you've traded Riot and if you made money on it, it probably is a good spot as any. There you have it. Volatility in here is really elevated. I just haven't had much success in it. I can't bring myself to do anything in there unless somebody can convince me otherwise with some kind of crazy. I think the margins in here are normally pretty good. I think if I was going to do something, I definitely wouldn't do it in November. Let me get out of the weeklies. I don't like the weeklies, folks. I'm sorry. I know there's a lot of people that trade them. I can't stand them. If I was going to do anything, I'd probably go out to January, and I probably let's see what a ratio does. Like maybe at the money ratio or a little less than the money ratio, $1 out, the 13.12. Yeah, I don't even think that's a good trade. I don't really want to put $1,100 on this thing. Nah. I'm just better off selling the 13s than doing the ratio. I'm just better off selling the 13 put. Or maybe one way to play it is sell the 13 put. Sell the 13 put. Take that premium, $1.58. No, that's not going to work either. And buy the 10-15 call spread. Do that for 84 cents. You're basically buying 67 shares for $1,300. I don't know. I don't even think you really. That doesn't even look worth it. You're better off just fucking buying for $1,300. You just buy 100 shares. Maybe that's what you do. Maybe that's the gig here. Sell the 15 or the 16. Yeah, buy the stock. That's the trade. Buy the stock, sell the 18, possibly the 18 or the 7. I like the 17 the best, actually. And sell the 17 call. That's really the only trade to me that looks worthwhile. All right. Yeah, because if you sell puts, you're going to have to do a spread. I guess, look, the problem with this is I don't want to chuck $1,000 at this. I don't want to chuck near $1,000 at all. Maybe I do the 15-10 put spread. I don't know. You need to do something in here. I don't know. I'm kind of throwing shit against the wall, folks, here. Because, again, it's one of those things where it's like, look, I'm damned if I do, I'm damned if I don't. I kind of feel like this stock is worth selling, some volatility in here. It has gotten beat up, but I don't want to chuck a lot of money at it. I want to do something cheap. And I don't want to buy calls because they're overpriced because of the volatility. So if I was going to do something, that's what I'm going to do. I would sell the 15-10 out in January. Looking for this to do one of two things. Either it's going to right, tank. It looks like I got downside. I'm almost like buying 34 shares here because it's got a 50-50 shot. And so it's either going to tank on me, and the most I can lose is $200. I like this one the best, honestly, for Riot. I mean, to me, that is the most economical way. And then I'm only really spending $270 to make $230. I mean, I could deal with that. I got a 50-50 shot. I got till January, so I got 60 days for this thing to kind of like chew away here in a road. And basically, I need two of the three things that can possibly happen, right? Three things that can possibly happen in any trade, right? It goes nowhere, which that's fine. That'll work for this. Because if it goes nowhere but volatility collapses, I'm good. If it goes up, I'm good. But if it goes down, I'm not. So that's kind of, and so 2 out of the 3 I'm good with. So there you go. There's your Riot trade. All right. So that's it. That's all I got. It's 8 o'clock. Have a good one. And hopefully